matter of time, isn't it? Apple will be, maybe by the end of this year, a $3 trillion company, will it not?
We were so close yesterday, right? We were dollars away of hitting that magical $3 trillion mark that everybody's looking forward to. And it's just remarkable in terms of how fast they've been growing their revenue. I mean, put things in perspective. Last quarter, they grew revenues north of 30% per year, year on year. And that's with $6 billion of supply constraints in the system. I'm sure we've all seen the semiconductor supply shortages that are ongoing. So despite that, they're growing revenues 30% per year. And their non-iPhone categories continue to grow so quickly. You've got services and wearables together that are over 30% of the business. So they're executing incredibly well, and they've got an amazing product lineup heading into 2022, which we can certainly talk about, but that's been propelling shares closer to that magical $3 trillion market cap.
Yeah, I mean, does it matter? Listen, we're in the news business. I mean, so we love these big round numbers, Jared. As you know, I'll take the knock on my industry. It'll be a big red flashy screen. But should it matter to investors other than the fact that it's just another leg higher in what has been one of the world's greatest money-making machines of the last ever?
It's just a milestone more than anything else. Should it be part of the investment process? I really don't think so. And this is not something that's necessarily even idiosyncratic to Apple, right, Brian? Look at all of large cap tech. When you look at MFANG as a category between Facebook and Apple and Amazon and Google, et cetera, those numbers are approaching as a category almost 30% of the S&P, right? So when you look at just the indices across the board, in general, you're not actually seeing that much volatility at the index level because all of these large cap companies are so large as a percentage of the index, and we're talking about trillions and trillions of market cap. So it's an amazing statistic if we actually cross that $3 trillion threshold. But as from an investment standpoint, I think it's just more of a milestone than anything else.
Yeah, what's the biggest risk? We always talk about the tailwinds, right? Great iPhone 13 demand, I get it. Everybody, you're in the Apple. Once you're in the ecosystem and all your phones and music are on iCloud, and you're not moving. So they've got sort of this, recurring customer base. What is the risks to Apple? Are there risks to Apple, Jared?
Of course, like any investment, there are always risks. I'd say the top couple of risks from an Apple perspective are probably twofold. One, you're always banking on the success of the next generation. So when you think about iPhone 14 into next year, to the extent that's not as successful, that's always a potential risk. But again, the company has shown such a great ability to migrate the existing install base and upgrade. And you're going to have the new low-cost iPhone, the iPhone SE3, in the first half of the next year. So you have new product introductions as well. The second risk that I think is certainly worth flagging is everything that's going on within the services ecosystem. As I mentioned earlier, services are 20% of revenues. They've been in an ongoing legal battle with Epic and other companies that continue to complain at the percentage of the take rate that Apple is charging on the Apple Store. So when you think about every dollar spent on the App Store, about 30 cents of every dollar goes to Apple. So is there a risk that high profitable services stream can see an ongoing take rate reduction? That's definitely possible.
Yeah.
Google just a few weeks ago announced they were going to proactively cut that revenue stream from 30% to 15%. So that's another potential risk when you think about that high margin revenue stream.